Howdy, boys and girls. Welcome to the Liberty Call for Tuesday, April 5th, 2022. I hope everybody's having a great day out there in the interwebs. It is a day here in Colorado. It's kind of overcast. We were supposed to get a bunch of wind and up to 70 and 80 mile an hour winds coming down through from Wyoming. But other than a couple of sprinkles here and there, it's been pretty calm. Last night it sounded like the roof was going to get ripped off a couple times, but other than that, no trees down yet. So again, it's supposed to be like this all week. So if hopefully this was the worst of it. So, all right. Well, if it's your first time here watching, please click on. There's probably a subscribe button right there ish, and give me a thumbs up if you could. I'd really, really appreciate it. So. And share with friends and family. Kind of a day in the market. Everything was down. Looking out at my charts, everything from stocks were down, fixed income was down, commodities were all down. Gold, silver, oil. I mean, everything in the red. So, not the most fabulous day in the market. So, again, if you've been listening to me on a regular basis, you know that we are probably due to expect some sort of recession here in the very near future, but it's going to take time. There's no crystal balls sitting around here that I get to look at, and that I get a preview on what's going on. So, all right, well, let's take a look and see how the markets did today. Dow Jones finished down 0.8% at 34,641. S&P 500 was down 1.26%. Closing at 45.25. NASDAQ was down the worst, 2.26, closing at 14,204. Small caps are also down 2.5%. The VIX was up 13.25% today, closing at 2103. So if you remember me talking about this the other day, it had gone back below 20. Anything below 20 I view as, fairly normal. When it comes to the volatility in the market, 20 to 30 is the danger zone, kind of, your yellow traffic light. Above 30, it's a red light. If you want to stop and then see if you want to proceed with caution, you're welcome to do so. Just be careful. All right. As far as the other Americas, Canada was down 0.7, Brazil down almost 2%, Mexico down 1.36, getting over to Western Europe. Germany was down 0.65. The UK was up 0.72. Let's see. France was down. The Euro stocks was down. Netherlands was down. What is this? Spain was up 1.2%. And Italy was down 0.86. And then some of these smaller ones were in the green. Getting over to the Asian markets. The Russian markets were down today. Both of theirs were down about 4.5%. Also, the Polish market was down a little more than 1.5%. But then we get a stretch of green here from Hungary, Turkey, Israel, Saudi Arabia, Japan, Australia, New Zealand, all the way down through the Chinese markets. They were all up. Looks like the best one was the Hang Seng. It was up 2.1%. The Taiwan weighted was slightly down 0.38, and looks like it was kind of mixed for the other small Asian markets. So for today, like I said, overnights looked pretty good. It wasn't until you got into the European markets and then here in domestically here in the U.S. that things were not so good. But hey, those things happen. So what is one day? All right, let's go ahead and dive into see the daily recap in the market. Stock market today, Dow slips on tech wreck as Fed officials talk up tightening. It's written by Yassine Ibrahim. Dow slipped Tuesday as tech was pressured by surging U.S. government bond yields after Federal Reserve officials continued to talk up the prospect of aggressive monetary policy in upcoming meetings. Federal Reserve Governor Lael Brainerd, who is awaiting a confirmation vote to take the reins as Fed vice chair, said the Fed is, quote, prepared to take stronger action if indicators of inflation and inflation expectations indicate that such action is warranted, end quote. Wow, that was a whole lot of word salad there, Lael. So how about just say, if inflation continues, we're going to ratchet up interest rates. Pretty simple. I mean, come on. All right. Brainerd also said the Fed could, quote, reduce the balance sheet at a rapid pace as soon as our May meeting, end quote. The hawkish remarks come ahead of the release of the Fed's meetings. The Fed's meetings from its March meeting expected to reveal more about the central bank's plan to begin balance sheet reduction. Treasury yield jumped sharply, with the 10-year yield rising above 2.5%, rising to a nearly 3-year high to growth sectors of the market, including tech. Big tech, Facebook excluded, was in the red. Apple, Alphabet were down more than 1%, while Amazon.com was down 2%. Twitter, however, bucked the trend lower, adding to its gains from a day earlier after the social media company announced that Elon Musk would join its board. Consumer discretionary stocks also dragged the broader market lower as weakness in Tesla and casino stocks, including Penn National Gaming and Las Vegas Sands Corp, offset gains in cruise stocks. Norwegian Cruise Lines was up 1%, and Carnival Corporation rose more than 2% after the latter reported record one-day bookings, stoking investor optimism about the return of demand for cruises following a pandemic-fueled lull. Energy stocks were on back foot as oil prices gave up gains, even as the European Union detailed plans to impose new sanctions on Russian oil imports. Quote, if an EU embargo on Russian oil were to happen, demand would switch to an even greater extent to other sources of supply, which would result in considerable price rises, end quote, Commerce Bank said in a note. Devon Energy, Occidental Petroleum, and Marathon Oil led the sector to the downside. Utilities and consumer staples, defensive sectors of the market, bucked the trend lower to end the day in the green. On the economic front, services activity in March slightly missed forecasts, though economists continue to expect the sector to rebound as the reopening gathers pace. Quote, demand for services remains robust, and we expect that this will continue through the spring and into the summer at a minimum, end quote, Jeffrey said in a note. In other news, Spirit Airlines jumped more than 22% after JetBlue Airways reportedly offered to buy the airline for $3.6 billion or $33 per share. So, again, there's always some bright spots out there. Let's jump over to our next one here. Oil inventories unexpectedly rose by 1.1 million barrels last week. U.S. crude stockpiles unexpectedly rose last week at a time when traders are weighing up the impact on demand following a resurgence of COVID-19 in China against fears of tighter supplies as Europe mulls an embargo on Russian oil. WTI, the U.S. benchmark, traded at $100.70 a barrel following the report after settling $101.96 lower. What? This doesn't make any sense. I guess it's probably $1.96. Anyways, lower from 104.25 or 24 barrel. U.S. crude inventories rose by 1.1 million barrels for the week ended March 31st. That compared with a draw of 3 million barrels reported by the API for the previous week. Economists were expecting a decline of about 1.6 million barrels. So they were expecting 1.6 million down, and they had a surplus of 1.1. The API data also shows that gasoline inventories fell by 543 barrels last week, and distillate stocks increased by 593,000 barrels. The official government inventory report due Wednesday is expected to show weekly U.S. crude supplies fell by about 2.1 million barrels last week. So, well, if distillates have gone up increased in supply, I haven't really seen it at the diesel pump. When I drove past the gas station earlier today, it was, I think, $4.79 for a gallon of diesel, which is outrageous. All right. Next here, what to know about reporting crypto NFTs to the IRS. It's been a big year for cryptocurrency, and a recent NBC poll revealed that 1 in 5 U.S. adults have now somehow used crypto. Now that tax season is upon us, if you have digital assets, you need to report them, but how? When it comes to cryptocurrency, tax rules offer clarity and precedent. You can report your crypto the way you'd report your stock holdings. However, for those who own other assets like non-fungible tokens or NFTs, things aren't so clear. Quote, although buying and selling crypto is simple and easy like stocks, there are new inventions like NFTs that the IRS has never contemplated before, end quote. Digital Assets Council of Financial Professionals founder Rick Edelman told Yahoo Finance Live, if you create an NFT, there's no tax liability. Think about an artist who creates a painting. There's no tax liability when you create an NFT, but when you sell it, that's when the tax gain is going to be due. With NFTs, there's a range of complications that build upon one another. For example, if a person who buys your NFT sells it to another person and you earn a royalty, quote, the royalty that is taxable, said Edelman. So you do have to pay attention to whether you're selling NFTs or earning royalties for them, end quote. Then there's another layer for digital asset owners to consider: 1099s, tax forms that cover payments you receive from an entity other than your employer. Quote, most people who are trading digital assets are not getting 1099s because there's no institution to provide them and no current law that requires them to do it, end quote, said Edelman, adding that some large crypto platforms like Coinbase do offer 1099s, and there are luckily some tax tracking services that can help. When it comes to crypto, there's lots of exceptions. Things have not yet been figured out. For instance, what do you do when you receive free crypto airdrops or tokens like ApeCoin? Things are murky because there are no rules, said Edelman. And at that point, it may be time to hire a professional. Quote, you should talk with a tax advisor who is knowledgeable about crypto to help you figure all of this out, end quote, he added. Additionally, it's unclear what crypto and digital assets currently mean for the IRS's tax revenues. Edelman said it's unlikely that the IRS will see an immediate wild windfall from taxes paid on digital assets this year, though one may come in the long term. Quote, half of all Americans who own Bitcoin bought it in 2021 and they've lost money, end quote, he said. So if anything, they're going to be claiming a capital loss on their taxes, end quote. The reality is that the most serious crypto investors view Bitcoin and other digital assets as long-term investments, so they have not sold yet. Therefore, there's no tax liability to report. And as a result of that, they are not paying or declaring their capital gains yet. Then there are crypto investors who are using their crypto earnings in ways that would not require them to report to the IRS. Quote, people who own digital assets have proven to be some of the most generous in America, end quote, said Edelman. Quote, those who have made big windfalls in crypto rather than paying taxes, they're donating it to charities across the country. Hey, it's always better to give to charity than give to the IRS because those scumbags are just going to waste it on government projects. And, good job. All right. Last article here has to do with retirement planning. Economist, retirement for most people is financial suicide. So this is interesting here. Lawrence Kotlikoff, the brash Boston University economics professor and Social Security expert, doesn't mince words. Quote, we Americans are financially quite sick. He writes in his new book, Money Magic and the Economist's Secrets to More Money, Less Risk, and a Better Life, before listing all the financial gaffes we Americans make in our lifetimes. Quote, as a group, we undersave, underinsure, underdiversify, pay for bad investment advice, rely on dying early, retire too soon, take Social Security at the first chance, free far too little trapped equity, borrow to invest in stocks, convince ourselves that stocks are safe long-term, live long-term, and live in a poor house, or live house poor, he writes. Marriage, divorce, college, and other lifestyle decisions we make irk him as well, but it's lack of savings, especially for retirement, that really gets under his skin. Quote, most workers are saving bupkis, he writes. Half of today's working families risk a major living standard decline in retirement. The share would drop roughly in half were all workers to retire 2 years later, end quote. So he offers his retirement advice in his book, which comes with a title that's a little bit of a wink. It's not abracadabra. Quote, it's lifetime budgeting, he told Yahoo Money. It's the economics approach to financial planning. It's not asking what you would like to spend, but here's what you can spend. Here's what else he had to say in the conversation with Yahoo Money. Is conventional financial advice about retirement all wrong? And here's his answer. Quote, financial industry steers people looking for retirement planning advice into fantasy land. Advisors ask them, how much would you like to spend in retirement? My answer is $1 billion a day. Then they ask, how much are you saving? Not so much. okay, let's put you in these high yield funds. Your probability of success of not running out of money is higher, and your probability of success is failing is small. That really means the probability of starving to death. So, uh, so where you have financial planners kind of basically putting together a plan where the probability of starving to death is small, that doesn't sound like a particularly good planning. What are the biggest mistakes that people are making when it comes to their retirement? A lot of people are just not planning for it. They leave it to somebody else. They're assuming that Uncle Sam and their employer are taking care of them. Well, they're not. I can tell you that. Then they are surprised when they hit retirement and find they may not have enough money. Second, there's lots of people that are not saving into 401ks or are in 401k plans and aren't participating enough. They're not even putting enough to get the employer match. Big mistake. Taking advantage of employer match is possibly the simplest money magic trick in the book. The average matching contribution to an employer's plan is over 4% of their pay, yet a quarter of workers eligible for this free money don't participate in their employer's plan. Let me proclaim this is a no-brainer. I second that. If the employer offers to give you free money for free, take it. In my opinion, the whole 401k retirement account experiment in this country has failed. I'd agree. Most people don't save nearly enough. Are people retiring too early? Yes. They retire too early thinking they're okay without really looking at it carefully. The median wealth of baby boomers retiring is about $144,000, which is about 3 years worth of median spending. In a retirement that could last 35 to 40 years in some cases. So most boomers are retiring with too little money by a long shot for retirement. That money could last longer if they worked longer. I think retirement for most people is financial suicide. It's a decision to take the longest vacation of your life. What's stopping people from saving into a retirement plan? At least 32% of employers don't sponsor retirement account plans, period, and they're employing a good chunk of Americans. And then we have a lot of people who have just got more pressing needs. They've got to pay for daycare. They've got to pay for a mortgage. They just don't feel they can contribute. What are the biggest mistakes people make when it comes to Social Security? They take Social Security too early at a much lower benefit. We have about 6% of people waiting until 70 to take their retirement benefits. My estimate is about 85% should wait until 70 to take that benefit, when it's 76% higher, adjusted for inflation, versus taking it at age 62. Again, really good advice. Anyone I've ever sat down with and done a retirement plan, especially when they're getting close to retirement, we've had this conversation. It would probably make more sense to wait until you're 70, until you get the maximum benefit. But hey, not everyone listens. That way, you're going to have more money more of your resources in an inflation protected form, and then you've got this insurance if you keep living to 100. You've got this much bigger number year after year coming to you. If you're disabled and you can't work and you don't have anything else, you're going to have to take it early. But there's lots of people that aren't and are taking it as soon as they can. What's your best piece of financial advice? I know a lot of people have student loans at the same time they're investing in stocks. It's a crazy thing to do. That was one of the things I'm trying to get across in this book. So what they've done, in effect, is borrow money to invest in the stock market. If you put less money in the stock market, you can pay off your student loan. Now, you're probably getting about 5 to 7, maybe 7% return. Same with mortgages. Because of a mortgage interest rate differentials, mortgages are financial losers. They're not nearly as bad as a credit card balance as student loans or payday loans, whose interest rates are far higher, but there's still something to be avoided when possible. Paying off household debts, starting with the highest interest rate debts, is your best investment. It's entirely safe, and it provides you a for sure above market yield. Parting thoughts: work on your financial health now, so you can spend your money till the end. That's the object. If you've made a lot of money, if you're rich, you don't want to put it in the stock market. The stock market could drop 50%. It has. So anyways, so yeah, it's a lot of good details there. Delay Social Security, pay down your debts, look at your home finances as a business. It's probably a very simple way to look at it. Look at your inflows, look at your outflows, make sure you're not spending too recklessly, and that you're putting money aside for the future. I always, to anyone, just off the cuff, if someone says, how much should I save? 25%. It's a good round number. 25% for you. Another 25% is going to wind up going to Uncle Sam until the government collapses. And then the other half you get to spend on yourself for right now. So anyways, all right. Well, that's everything I had for today. I hope everyone has a fantastic Tuesday evening. I didn't even talk about the national championship game last night. I was correct. I called Kansas was going to win. I didn't think the game was going to be that close. North Carolina came out pretty flat, like I figured they would, but they came roaring back the second half of the first half, and they had a 15, 16 point lead, and then they gagged it away in the the first 10 minutes of the second period. So it was a good game. NC had a chance to pull it out at the end, but too many mistakes, too many turnovers, and Kansas was just too strong in the end. So congrats to both teams. It was a fantastic tournament. The last 3 weeks, I had a ball. It was definitely lots of good games, and unfortunately my Cougars came up short in a week ago. But hey, there's always next year, and Coach Sampson's got him on the right track. So I got a lot of confidence. All right. Well, that's everything I have for today. Hope everyone has a fantastic night, and I will be back tomorrow. Bye.